Let's get into inflation rates, White House in damage control mode as crypto markets brace for an 8% plus inflation. And we did a poll surrounding this yesterday. Obviously, some of it was just incredibly inflated, like I was saying, like 40%. It's really hard to track inflation, I think, because the numbers can be kind of manipulated in a lot of different forms. So even when we talk about 8%, the effects of that on the market for things like groceries, whatever else it may be, gas, of course, and so on, may be a lot more pronounced. And because, of course, gas runs the entire economy, everything else kind of goes up and follows there. So usually when I'm looking at inflation and what it's doing, I'm looking at the price of gas and how that affects everything down the line. Let's get into this article, though, from CoinDesk. And of course, they say White House blames Russia's war on Ukraine for the extraordinary elevated inflation to be revealed by Tuesday's data from the Labor Department. The Biden administration is in damage control mode ahead of the latest inflation data, which is likely to show the cost of living soared in March and bolster recession fears. Quote, we expect March CPI headline inflation to be extraordinarily elevated due to Russian President Vladimir Putin's price hike, end quote, White House Press Secretary Jen Psaki told reporters on Monday. Quote, we expect a large difference between the core and the headline inflation, reflecting the global disruptions in energy and food market caused by Russia's invasion of Ukraine. It's pretty funny how they keep harping on Russia's invasion of Ukraine and they don't talk about depleting our oil reserves or any of these other factors that have been going on, or even the COVID stuff and all of the lockdowns and so on affecting this at all, which I feel like is a delayed effect to it. And you would think that they would want to point that out as well, just due to the timeline of presidencies and parties in control and so on. Either way, we'll continue. The data due on Tuesday at 12:30 UTC is forecast to reveal the Consumer Price Index, CPI, which is defined as the change in prices of a basket of goods and services typically purchased by specific groups of households, increased by 8.3% year on year in March, following February's 7% rise, according to data source FX Street. The above 8% figure would be the first in at least 4 decades. The core inflation, which strips out the volatile food and energy component, is expected to have risen 6.6% year on year versus 6.4% in February. According to Psaki, the disparity between the two metrics would stem from an abnormal increase in gas prices last month. Quote, at times, gas prices were more than $1 above pre-invasion levels, so that roughly 25% increase in gas price will drive tomorrow's inflation reading, end quote, Psaki said. The White House is warning of a big bump in the headline CPI due to the volatile food and energy component is perhaps aimed at calming market nerves ahead of the data. Risk assets, including Bitcoin, have come under pressure in the lead up to the CPI release on fears that an above 8% reading would strengthen the case for faster rate hikes and balance sheet runoff by the Federal Reserve. Last week, Federal Reserve Governor Lael Brainerd said, quote, bringing inflation down is of paramount importance, end quote. Brainerd struck a hawkish tone, favoring interest rate increases and a rapid balance sheet runoff to bring U.S. monetary policy to a, quote, more neutral position, end quote, later this year. Psaki's comments perhaps indicate the White House expects the headline inflation to cool in the coming months as the panic in the energy market has faded. Gas prices in the U.S. have pulled back to $4.11 per gallon from the record high of $4.33 per gallon hit on March 11th, according to the American Automobile Association. The West Texas Intermediate crude traded at $96 per barrel at press time, down 23% from the high of $123 seen a month ago, per charting platform TradingView. Energy prices had surged after Russia invaded Ukraine in late February. It remains to be seen if investors take cognizance of the White House's view and remain calm in case of an above 8% CPI print. A big miss on expectations could restore risk on sentiment in markets. That said, the jury is out on returns of animal spirits in asset markets, given the growing consensus that the era of low inflation and cheap liquidity may be behind us. Quote, we may be on the cusp of a new inflationary era, end quote, Augustin Carstens, general manager of the Bank for International Settlements, said in a speech earlier this month. Quote, the forces being behind high inflation could persist for some time. New pressures are emerging, not least from labor markets, as workers look to make up for inflation-induced reductions in real income. Quote, it seems clear that policy rates need to rise to levels that are more appropriate for a higher inflation environment. Quote, most likely, this will require real interest rates to rise above neutral levels for a time in order to moderate demand, end quote, Carstens added. So the big note here, I think from our perspective, like as cryptocurrency enthusiasts and so on, is going to be like whether or not Bitcoin does its job that was originally intended, which is to hedge against inflation. What we've seen kind of in the past is it doesn't seem to be doing that, and it seems to be following traditional markets. Once again, there should be a distinction between Bitcoin and other cryptocurrencies, in my humble opinion, just due to the fact that it functions in a form that is more fundamental to the base ideals of cryptocurrency, because it is the first one, peer-to-peer and without interference of governments and banks and that sort of thing, as opposed to something like Ethereum, where we see definitely big VCs and so on participating within it, and it sticks more, in my opinion, to a technology. And so fine if it wants to follow the stock market. But like I said, unfortunately, what we have seen historically is Bitcoin following essentially just the traditional markets. So how the traditional markets respond will probably have an impact on the way Bitcoin in particular responds to whatever the reports end up being at this point. Now, if I'm speaking and we have already gotten the report, I don't know what 12:30 UTC would be in translation in my time. Right now, I'd have to look it up, but maybe near the end of the show, we'll double check, make sure nothing's been reported on, and then kind of move from there. Hopefully, Bitcoin does end up being a hedge against inflation. One of the notes that I would like to make here, though, too, is we are not really seeing the response from Bitcoin in relation to the super cycle that we normally see. Typically, it's a 4-year cycle, and it is based around the halving of Bitcoin, and it affects the entire cryptocurrency market. So when this happens, essentially right after the halving, which is a reduction in the minted Bitcoin that's paid out to miners for solving blocks, you see a sharp increase in the price of Bitcoin. That'll go up for a couple years, and then after that, what you will see is a big dip off, which we should be seeing here around this time of year, and then it'll be flat for a couple years before the next halving. Problem being, of course, there is that you have that big dip. What does the dip normally go to? Well, it usually goes to the previous all-time highs. The previous all-time high that we saw last cycle was 21,000 for Bitcoin. So you would have expected by now, it's getting into April, you would have expected Bitcoin to be a lot closer to 20K than it is to the 40K that it is right now. And so if we do take that into consideration, what we could say is due to compounded factors between the super cycle and, of course, what we're seeing in the economy, we are sitting at 40,000, which is much more than we would normally be at, meaning that we could see much higher rises at the next halving of Bitcoin. And that's just like, obviously not financial advice, just kind of an extrapolation of the data that I have with my very rudimentary understanding of how all of these things are put together. And hopefully I articulated that well enough. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.